Okay. Let me just see if...
I'm going to try to shut down any other apps that might even remotely be using my camera. Either one of my cameras, neither one is working now. So I don't know if there's people listening in. If you are, thank you very much. I got a really bad haircut yesterday, so my cameras automatically don't want to show me. It's using the new AI that takes a look at your haircut and decides if you like it or not, or if it's a good haircut, and if it doesn't, the camera's shut off. So apparently it's a really good haircut.
Thanks. Brilliant, David. And yeah, I'm getting likes. There are people online. That's great. I got a message on WhatsApp from a friend who promised to join. I've roped him into it, and he's saying he can't use the original link. And for those of you who are watching, thank you for joining, and apologies. The software that I was using, for some reason, hasn't allowed David to join. So David is here. He's working on unblocking his camera because it's probably linked to my old original platform. So I guess what we can do is just really start the show. And let me first introduce myself. For those of you who don't know me, my name is Dante Healy. I used to be a finance manager, but I now work in project management. I'm an IT professional, and I got into finance transformation about 6 years ago, moving from accounting to project management, got addicted to it, and I have been in technology ever since then. And for those of my listeners who don't know who David is an incredible person. I recently interviewed him on my podcast. He's actually the global recognized expert in cash flow optimization, and he teaches accountants how to grow their revenue with cash flow advisory services as a critical competitive advantage. And getting the cash flow advisory certification program, as well as the mastermind groups, he enables accountants and other finance professionals to understand the critical levers to growing their business. In addition to that, David has a very impressive career before he he started his own training company. He has a master's degree in international management, 20 years working with Fortune 100 companies, including Morgan Stanley and Dell. He's also a former vice president and general manager of Kodak in Latin America, completely transformed their division from years of loss to profitability within 18 months. He educates and advises accountants and CFOs on cash flow, as well as those profit maximization strategies that we're going to talk about today. In addition to that, he's also helped hundreds of businesses with revenues of 1 million to 20 million across 40 countries. So I am going to share my screen. Hopefully this will work. Before I share my screen, I will actually share my screen. I will just share my screen on this platform. Sorry about this. So I've got LinkedIn open. It's a bit confusing. So let me just share screen and see where we go with this. So hopefully you can all see my screen. I will share the presentation I had prepared. And I'm going to swap so I can keep the speaker notes. So I've just introduced my esteemed guest, David Safir. And now I'm going to talk about cash flow for a bit, and then I'm going to interview David. So we've spoken about David's credentials, and now I want to just, for those of you who aren't so familiar with the idea of finance and accounting, just wanted to go through an analogy I like to use when describing cash flow. So we'll start with the business. And in this analogy, your business is the bucket, which is essentially an artificial entity used for generating more money. And in this analogy, you can think of that business as the bucket, with cash being the water. Now, money might come in, and it comes in from various sources like sales, loans, investments, interest, and as well as other income. And you can't always directly control when sales will convert into cash unless it's predictable or recurring revenue. However, money tends to flow out at a pretty much constant rate because you're leaking it out of your bucket through things like outgoings such as salaries, rents, taxes, and they tend to be on a predictable cycle and essentially very controllable. So the cash flow game, I like to call it, is filling the bucket. And filling the bucket has essentially three basic rules. When the bucket fills faster than it empties, you're winning. When the bucket empties faster than it fills, you're losing. And when the bucket goes dry, you either need to find more money or you're out of the game completely. And that's the entire game. Everything else is fine detail. So moving on from that, in large corporations, you tend to have organizations with their finance functions, and they tend to have three areas of focus with the three financial statements. You've got your profit and loss, which is FP&A or management accounting. You've got your balance sheet, which is accounting or financial reporting, and then the cash flow statement, which is corporate treasury. And oftentimes it's suggested that there is a gap between the importance of cash flow and the amount of focus that it receives from finance professionals. And there's good reasons for that, because your profit and loss is more familiar. It's often the first thing you learn as a finance professional. And as a result, finance professionals tend to be more comfortable with it when they talk about value creation and making those commercial decisions. The income statement is also more relevant to investors, as that's the one they look at when they are evaluating the financial health of a company. And as a result, finance professionals tend to focus on that when communicating to their external audience. And then finally, the controversial reason, by the time you get to producing the financial statements, the results have already been decided. However, the income statement is easy to manipulate at that point. So there is that temptation to focus on the income statement to make the company's financial performance look better than it actually is. So I guess with that background, I'm going to start by interviewing David. David, I hope that was a good introduction to kind of what we're going to talk about today.
It was a great introduction, and you can hear me okay? I just want to make sure.
I can hear you perfectly. Thank you, David.
Good. Can I just make one little comment?
Go for it.
What you said on the long term is accurate regarding if your cash balances are going up, you're winning, or down, you're losing. However, one of the biggest differences of cash flow, it's a little bit like the P&L. The P&L is for a period of time. And so you could be making money 1 month or 1 week on your P&L, and the next week you're losing money, and up and down and up and down. So I just want to make it really clear that if you're in control of your cash flow and it's going down and that's the plan, you're still winning in the short run, right? At some point you got to start making money. We see that happening with these large public they're public corporations that have used a ton of cash as a startup, and then all of a sudden they're running out of cash, and they've got to go raise more funds, etc., or they end up their stock ends up crashing. But during the short run, a month, a week, even a year, it could be okay if that's your plan.
Thank you, David. That's really insightful. And yeah, it's all about those time horizons. There's no clear-cut rules, and there's always a context to it. Absolutely. And talking about context, and I gave some reasons why finance professionals tend to prefer the P&L. However, sometimes it's been told that they totally ignore cash flow. But why do you think why else would you think finance professionals would be tempted to focus more on the P&L than the cash flow in the business?
Well, so financial professionals usually work for a firm, or sometimes they're working for themselves as a fractional CFO, but they're still working for their clients. And a lot of times it's what is the client looking for, right? What is the business owner looking for? If you're in a publicly held company or even privately held company, you're dictated to do what you're asked to do as an employee or even as a contractor. So, and what are all these business owners geared up to look at? You said it really well. It's the P&L. It is the first thing I remember distinctly. That was the first thing I learned in school. The official statement of cash flows that's available now didn't exist when I went to school. And it's confusing as hell as far as I'm concerned, especially to a layperson who's not used to reading it. And so we are victims of our environment. And you hear announcements on TV, on the radio, the podcasts, and you hear what's the first thing you hear about? That profits are up, profits are down. You might hear about strengthening their balance sheet once in a while if it's an in-depth, financially oriented newscast. But almost never, unless it's in negative terms, you hear about they're running out of cash or they've got a cash hoard, right? And then it's more from a strategic perspective, not a tactical, how do you get the cash hoard or how do you prevent yourself from running out of cash?
Absolutely. And it's that when I've heard of the cash reserves that are built up, usually it's for some investment and it's referred to generally as a war chest. And as you say, it's very strategic, very secretive as well, how they're going to invest the cash to grow the business. Thank you. And so when do you think it is more appropriate to focus on the cash rather than P&L? At what point in the business should they be switching that emphasis, maybe putting more of that attention on the cash flow rather than profit and loss statements?
So, I've got a huge bias because that's what I focus in on. But as far as I'm concerned, small businesses need a cash flow system a lot more than they need to worry about their P&L. Because they can be earning, they can be cash positive and losing money, and they'll stay in business forever. Now, people say, well, that doesn't happen. Eventually, you're going to lose money. Oh, yeah? Take a look at the real estate industry. Real estate investing is based upon, this is a US-centric statement, but real estate is often cash flow positive, but you loses money because you're depreciating large amounts every single year. So you can have a sustainable profit negative business. Let's say that's not happening, right? You still, as a startup company, whether you're doing it out of your own pocket or you've been given $10,000 from a friend or $100,000 from 10 friends or $1 million from a fund, at the end of the day, generally as a startup, you are spending more money than you are generating in revenue. And so you want to know, how long do you have until you run out of cash? Or at some point, have you started generating cash instead of losing cash constantly? So as far as I'm concerned, Dante, it should be from day one. And if you're not a startup company and you have any concerns at all about cash flow, then I'd suggest that you implement it. Now, people say, well, David, that's your specialty. But let me tell you, I think a huge learning came from COVID, where businesses almost across the board were totally impacted. Even if you didn't have to shut down, your inflows and outflows, many companies were impacted, even if it was for 2 or 3 months. And so every company should be aware of what's their run rate, or what is their runway. If business stopped today, that cash stopped coming in, but expenses continued, non-variable expenses, how long could you last? And how long do you want to be able to last? If you can, is lasting for 3 months okay, or do you want more? And I could keep going on, but I'm going to ask you, go ahead and ask another question.
Okay. So what are the issues, or are there any issues with accrual accounting that make it difficult for business owners to understand their financial positions?
There are. There's a lot of issues with accrual accounting. Before I go there, I'm going to go back again. I got to just point out one more area that people want to pay attention to their cash, and that is if they have anything that they need to purchase and they're trying, whether it's getting a loan, because oftentimes there's down payments involved, or they're trying to pay cash. Like you said, it's a war chest that they need to be able to accumulate $5,000 or $10,000 or 50 or 500. It's all scale. But if you don't have a plan and you don't have the cash in the bank, you need a plan to get there. But going back to accrual accounting, accrual accounting, as far as I'm concerned, can be anything from slightly deceitful about how well you're doing as a company to completely throwing off your financial picture. And I've got slides that I've done for when I do some presentations that show, I had a client that showed they made $2.1 million in revenue if you do accrual accounting, but they only brought in about $700,000 in cash for the month. And yet, so you say, well, so what's real? And so I start saying, yes, over time, and I understand the need for large corporations to do accrual accounting, and it's great theoretically. But for a business person, especially a business person who's not financially oriented, it's completely disorienting. Invoices don't equal revenue. Bills coming in don't equal expenses. Payments going out for loans don't show up at all. If a business owner is paid through salaries and part of the payroll, great. But if they're not, that doesn't show up. They're paid disbursements or dividends. So it can be completely disorienting. And a huge wake-up call when you finally realize what's happening because you switch to cash or you do a cash flow model.
And that's always the problem, because cash and accounting profit tends to diverge a lot through variations in timing differences, valuation. And as you say, there's certain cash movements that never touch the profit and loss, that are purely balance sheet related. I remember things, not just the payments to suppliers and receipts from customers, but also deductions from employee salaries. Never hit the income statement in terms of, and also indirect tax. So it's always a challenge to determine what's the reality, if a business is healthy or not. I mean, over time it all kind of equalizes out, but there's always a business, if it's continuously a going concern, then there's always going to be this disconnect and state of flux between cash and profit. So I guess regarding cash flow and predicting future cash balances, what are some of those other issues using accrual accounting to form the basis of your cash flow statements?
I think instead of trying to explain the theory, I'm going to point out a real life situation I dealt with a few
Mm,
years ago. Business owner, I was hired to help them turn around because they weren't going to make payroll in 2 or 3 weeks. I mean, it was dire. And he
mm,
handed me the P&L from his accountant. And it's a tax accountant, right? So that's an
mm,
important thing. I'm not talking about all accountants, but when you go out and hire a tax-only accountant, you've got to realize that that's what they're there for. And he said, David, my accountant tells me I made $250,000 last year, but he can't explain why I don't have any cash in the bank. Um, it took a day or two to figure this out, but eventually I said, come on out, let's go to your warehouse. You want to see where your cash is? And I said, here it is. He had way too much inventory for the size of business he had. But it doesn't show up on the P&L. Why is that? And it's because when you pay for inventory, it goes from cash to an asset. And
mm,
so it goes from one asset to another. And so it comes out of your bank account, but it moves right below in the statement saying, okay, you've got inventory. So it's great. You're still making money.
mm.
Yeah, you might be making money, but it doesn't mean you have cash in the bank. Um,
Yeah.
and so anyhow, sorry, it doesn't actually show up. It doesn't show up on the P&L as going into inventory. They're two separate statements. So
Yeah.
that makes it even more confusing, right?
Mm,
Because
mm,
it's not an expense line until it comes out of inventory, and then you either pay for the bill down the road, but it comes out of inventory and then becomes cost of goods sold. There you go. There's the whole thing. Well, as opposed to, and there might be some much better accountants on here than I am, in cash accounting,
mm,
you pay for it and you pay for it. You pay for it, it shows up on your P&L.
mm,
And you don't really end up, and it might end up on cost of goods sold right away, right? You're paying for inventory. Inventory is part of cost of
mm,
goods sold. And so it shows up the month you pay for it.
mm,
But there could still be a delay because you have a bill come in for $100,000. You don't have to pay for it for 30 days. So now I'm going to get to what you're talking about, saying, well, so how do you deal with it? And the answer is simple, and that's you do cash flow modeling. But doing a cash flow model can often be quite complicated.
mm.
So simple answer, more difficult execution to get there.
Yeah. Yeah. Sometimes the simplest answers are always the hardest to implement. And definitely in this case, it sounds like, yeah, there's always a challenge for businesses to try and, yeah, reconcile cash flow to profit and loss. And again, it comes back to not just the timing issue, what is regarded as an expense in a right period, but also estimations using accounting and accrual-based adjustments and various principles like matching. Um, and you mentioned inventory, which is very interesting because on top of inventory, when you manufacture, you're allocating overhead. So people's salaries, like direct labor,
Mm-hmm.
machinery, etc., and you're building up you're deferring expenses that have come out in real cash and putting it into inventory. So on top of the cash that you've actually spent on the materials, you're also allocating. You've spent the cash and you're allocating profits out of costs out of the P&L into your balance sheet. So it's almost like you've converted it into an asset, which kind of muddies the water. So whereas really you spent the money in period one for the salaries and the direct overheads, that's gone out in cash. But however, profits are it's removed from profit because you haven't sold the goods yet, and so it kind of compounds the differences. And yet, speaking of that, why does everyone then use accrual-based accounting when it seems to hide that reality?
All right, so this is completely gospel according to David, right?
Mm,
I think there's a couple reasons. Number one, what is taught in school. I don't know of any programs who say we're just going to teach cash accounting so you can go out and work with small businesses. Schools, especially the large schools where the big accounting firms are hiring from, where the mid-regional accounting firms are hiring from, they need people trained in accrual-based accounting. So it's
mm,
incumbent upon the schools to their students to train them in accrual-based accounting so they can go get jobs. If they don't get a job, the next generation of students doesn't come in. And so it's part of our economic system where these large firms deal with publicly held companies, they deal with large privately held companies, and you need accrual accounting. Here in the United States, if your business is over $25 million, you need to report to the IRS in accrual basis. And that went up a lot at some point. It was like 5 or 10 million a few years ago. So that's a big reason, in my opinion. And so what happens? These people say, well, I've got 2, 3, 5, 10 years under my belt at a firm. I want to go out on my own, and I'm going to bring with me corporate practices because corporate practices are the best practices. You mentioned that I worked for some really great companies. And one of the things I had to do is unlearn things that work at corporate that they still work, but they're not optimal in a small business environment. And when I talk small business, I'm talking 10, 20, 30, even $50 million. In the United States, it's 500 employees or less is considered a small business. And people go, wow, that's a lot. Yeah, anyhow. So at some point, it's more of in my opinion, it's because of the inertia and this industry standard that I'm guessing accountants and finance people are afraid to move away from. But Dante, there's a real easy fix. You don't have to stop doing accrual-based accounting if you don't want to. The real issue to me is, and I'll just use QuickBooks as the example, you run a report and there's this little button, and the little button it shows you, is this an accrual-based report or a cash-based report? And the default is accrual. So there you go. There's another industry leader that says, this is the right way to do it. You do it through accrual because that's what we're going to give you. And you have to manually switch it. And you can, I think there's a company setting, you can default then to cash. But it's that easy. And it takes approximately 3 seconds to push the button and regenerate the report. And voila, it's cash basis accounting.
And that's another reason why people should be working to get away from manual processing, because it allows you to have that flexibility and do things like switch accounting methods like that at the touch of a button. You switch a field and you suddenly all your financial transactions are restated on the terms that make the most sense for the use case that you need. And David, you're speaking the gospel according to Dante in terms of coming from a corporate background. I understand it's very difficult to take that view of what is a priority when all the I's and all the T's must be dotted and crossed. So it's easier to revert back to anything that's rules-based because it's a protection, right? You don't have to make decisions. And if you're doing things manually because the systems aren't as flexible, and I think that's an advantage for smaller businesses because QuickBooks is not going to handle like industrial size volumes of transactions, but what it does for a small business that is focused and niche is it can handle its transactions very, very well. And it's affordable for medium-sized businesses. This is where I guess kind of Excel then becomes a disadvantage in the sense that you can run some of your transactions up to a point, but if you don't have a system, then it becomes very difficult to actually do that sort of pivot or restatement without having someone who's perhaps an expert in Excel who can engineer a super spreadsheet that can do that restatement for you. Everything's possible, but is that the most efficient way, or should you just invest in that monthly subscription?
Well, so I'm sitting here shaking my head going, no, you don't want to write a spreadsheet for this. Spreadsheets are, well, investing in a monthly subscription, but it's QuickBooks Desktop also has done this for I don't know how many years. This is not new, the switch between, and FreshBooks does it and Xero does it. I don't know about the big packages, right? I don't know if you can run Oracle financials and get a cash basis. I don't know. I've never run Oracle financials. But nobody should be doing bookkeeping on a spreadsheet, in my opinion. It's too fraught with mistakes, and you're reporting. Now, somebody probably there has written a brilliant spreadsheet that allows them to do this. Great, go find it and buy it. But starting from scratch, to me, it doesn't make any sense for the low costs that our accounting software is these days. But what you do need is a cash flow model. And oftentimes that could be the best way to set up a cash flow model, but you're not trying to convert from accrual to cash basis accounting. You're just saying, what is reality? Accounting oftentimes isn't real, it's imagined, or it's theoretical. It truly is, right? We learn accounting theory in school.
Totally.
And that's one of the, I think, the mental issues. And I think a lot of cash flow management, cash flow optimization is mindset. And we've got to break out of these are not laws of neither man nor God, that they're called accounting principles and they're called accounting theory. And we've got to break those bonds that constrain us and say, what is reality? How much money went into the bank this week? How much money came out of the bank this week? How much money total went to pay off the loan? This whole separation of principal and interest, so only interest shows up on your P&L, and then separately, the principal payment shows up on your balance sheet. It's not helpful. You got to say, what is the total amount that just left the bank account? So we can figure out how much money we have to pay the rest of the bills. So I think I just went on a bit of a rant. I'm not sure where we are, so I'll turn it back over to you.
No problem. And it was a great rant. And I completely agree with you. It's very hard. It's a measurement at best. That's what accounting profit, accruals-based profit is. It's an estimate. I think based on these rules, these general laws, these principles, that this is a true and fair. I mean, in the UK, we always revert back to the true and fair principle. We think this is a fair representation of the performance of the business. And in that regard, if cash is reality, why not switch to cash basis accounting? Do you think that would let you see forecasts in general more clearly?
It's definitely generally easier. But you need to get down to detailed specifics. And what do I mean? You have a large expenditures. So accounting measures history only. It doesn't project. So absolutely 100%. It's better with cash basis accounting, but there are a few things you need to bring into play. And I mentioned two of them, and they're the most obvious, which is um, your payments to business owners that are not part of compensation, the normal payroll, as well as your payments to debt that are not part of, that are not interest. Those are the ones that are obvious that you've got to plug in that you will not find in your P&L, which is mostly where you get your projections from.
Yeah. Thank you, David. And I think that's all my questions I had. And we've actually overrun on the agenda, but I'm just checking for any of the members in the audience. Apologies, I can't see anyone. So if you're here still watching, feel free to leave some questions. I'll hang on for a couple of minutes. If anyone has anything you'd like to ask David on cash flow, how to improve the cash position of your business, or even if you want to just say hi and tell us where you're from. Just waiting. At the moment, it says we have 26 viewers. Let's see if anyone's actually still here. And David, thank you so much for sharing your time generously. I am very sorry. Next time I'm going to, I tested the software, the original software. I had some really cool things, including a QR code to your website so people could subscribe to your newsletter. And unfortunately, I haven't been able to show that functionality. But hopefully, if you're okay, I'll make sure I test it with multiple people next time. And if you're still up for coming back, let me know.
Absolutely. Here, I'll make a public statement. I'd love to come back. I enjoy our conversations. Do you mind if I tell people how they can get onto my newsletter?
Oh, please do, David.
And I can't get into the chat to actually type it in, or I would. Maybe you could. So there's a website. It's CIC60. Cash is clear. CIC60.com. And you can go and you'll get an ebook on 10 habits that will generate cash flow for any business. And so you get that download, and you'll be registered on my email list for any kind of newsletters that I send out.
Yeah. And I would just really advise you to do that. I am on the newsletter as well. It's super insightful. Please, I've dropped the link in the comments, so feel free to subscribe. It's a great read, and even though I'm not in finance anymore, I still like to study up on finance. And it's never going to go away from my life. Thank you. So I'm just waiting. Give it another few seconds. If no one, wait, we have some comments. Let me just check. Let me see. Where's the comments? So let me just try. It's me. I'm struggling to get to the questions. Oops. Wait. I got it. I needed to wait. Maybe. Is anyone else asking questions? Oh, thank you, Gotham. You're here. Rakshana, thank you very much. Does anyone have any questions before we end the call? Looks like not. And I think there's a little bit of a delay between when I speak. There's a lag there, playing it back on the phone on mute. So apologies if I missed the question. If there is any questions, I will forward them on to David. I'm sure he'll be very happy to answer them. David, as always, it's been a pleasure. I love our conversations. I learned so much from talking to you. Thank you for being on the show.
Thank you, Dante. It's a real pleasure.
Thank you, sir. Have a great weekend, David. And for everyone watching, enjoy your weekend and hopefully see you soon. Thank you.